Hello everyone. I hope you are doing good, mentally and physically fit and fine. So, friends, we are re-recording this particular lecture because there were some technical issues. I'm thankful to SICASA, SIRC for arranging these revision sessions, guys. And we are going to see a very important chapter in this particular revision session. Guys, what we have done is, for the new course, we have made two types of revision videos. One is full concepts, all concept revision, and 350 plus important concept, 350 plus important question revision. And we have recorded all of them. We were left with only one part, and that was chapter 3 to chapter 12, all concept revision in English. Hindi, we are through with everything. We were left only with this. And so we planned this with the Chennai branch on 26, 27, and 28. Okay. And today's 26th session was having some technical problems. So I said that, okay, let me re-record it for you guys quickly. So in this particular video, we are going to cover in very short time 800 series, 800, 805, and 810 quickly. Let's see, guys. So there's a case study, and simply case study, this involves application of knowledge of the 800 series, nothing else. We will see the concept, then automatically you'll understand how it is applied there. So 800 series has three standards: 800, 805, and 810. And 800 deals with audit of special purpose financial statement. 805 deals with audit of single financial statement and element of financial statement. And 810 deals with audit of summary financial statements. We are going to see one by one all of them. Now, all the three standards have one thing in common. Initially, they talk about whether to accept these assignments, because they're truly new type of assignments for everyone, for the society, for the chartered accountants, for everyone. So you should be careful when you accept them. After that, how planning and performance should be done. And finally, how opinion should be formed and how reporting should be done. So they principally focus on these three things. So first one is SA 800. So it is going to focus on, again, as I discussed, three things. Now the first thing is, what do you mean by general purpose financial statement and special purpose financial statements, how they're different from each other. So now, what do you mean by financial reporting framework? Basic principles and format which is used for preparing financial statements, that is called as financial reporting framework. Like AS plus Schedule 3 is a framework for small companies, Indias plus Schedule 3, AS plus banking regulation, AS plus IRD regulations, and so on. All these are frameworks. Now, frameworks which are prepared for the information need of public at large, shareholders, financiers, government, employees, everyone, that is called general purpose framework. Majority of the framework which we know are general purpose framework, and financial statement prepared using them are called general purpose financial statement. Now the frameworks which are prepared for specific users, they are called special purpose framework, and financial statement prepared with the help of them, they are called special purpose financial statements. For example, let's see. Now this is the example. We have example in front of us. RCC, R for regulator. So Telecom Regulatory Authority tells everyone, all the telecom companies, prepare your financial statement again, region wise. Divide your business into 7 regions, 7 columns, and make columnar financial statement. How much you earn from each region, how much is the expenditure, how much the asset and liabilities, so that it is useful for us to determine the spectrum fees and what should be region wise fees, and so on. So there it is prepared specifically for the regulator TRAI. It is a special it will be a special purpose financial statement prepared by the instructions given by the TRAI, that is special purpose framework. Then next is, suppose there is a contract, there is a joint venture contract between you and me, and the last 2 pages it specifies what will be the format of financial statements and how they will be prepared. It will be useful only for you and me. So that particular contract based framework is a special purpose framework. C. Then C stands for creditors. Creditors may say that you prepare financial statements on cash basis, assets on realizable value, liabilities on payable value. Liabilities on payable value, that will be again a special purpose framework. So now we know what is special purpose, general purpose framework and financial statements, special purpose framework and financial statements. Now, what about acceptance? So if these assignments are offered to you, we should see land points. So we should focus on 3 points, and that is land points. So what are these land points? L stands for law. Law related things are there. If standards and format, if the framework is prescribed, if the principles and the format are prescribed by law, we will presume that it is an acceptable financial reporting framework. Acceptable financial reporting framework will presume that, unless you have specific information against it. This is targeted in MCQ. Then if the standards are recognized by if standards are issued by recognized bodies like ICAI, again it will be presumed that they are acceptable. And see, it's in a sequence. If it is given by law, presumed acceptable. Given by recognized body, presumed acceptable. Below that, if the standards are supplemented by law, so standards are prepared by someone, maybe they are not so much recognized, plus law gives the format or other important things. So there's a combination. In this, we'll have to evaluate whether it is a acceptable framework or not. And if there's a conflict between both, it will be resolved as per SA 210. Sometimes conflict may happen, and SA 210 explains how to resolve it. So that is L. So see what law says. Then apart from this, if there are other financial reporting frameworks, we have to see their attributes, features, and we need to think carefully, are they acceptable? Okay, they should be complete, they should be reliable, they should be consistent, and so on. N stands for need of intended users. See whether the framework fulfills the need of the intended users. Some of them may want detailed information about the revenue, some of them may want detailed information about the asset, and so on. See whether the framework is fulfilling those requirements. So so these land points need to be seen. If the land points are positive, then we should think about accepting a particular audit of special purpose financial statement. Then how to plan and perform? When we are planning and performing these audits, it's very simple. The first most important thing is, when we plan and perform, ensure that there is a compliance of ethical requirements, that we are fulfilling five principles of ethical requirement, and ensuring that the whole team is independent. And then the next very important, ensuring compliance with all the standards. Yes, it is mandatory to follow all the standards. This may be targeted in MCQ. You need to follow all the standards from SA 200 to 700. But then if there can be exceptions. If standard is not applicable, like 510, or conditions are not fulfilled, like there is no reason to modify SA 705, it's absolutely fine. Some standards may not get applicable. There can be departure. We may go against the standards. Even that is possible. Going against the standard, guys, going against the standards is absolutely fine. It may happen sometimes that alternative audit procedures are more effective. Even that is allowed. For example, sometimes physically attending physical verification may not be possible. Drone technology may be more effective when it comes to physical verification of the trees and the forests. So we may use it. So that is allowed. Adjusting standards are allowed. And now they give the example, like SA 260. When you apply SA 260, many times you will find that TCWG and management are same. So we don't need to, if something we have communicated as a management, communicated to management, we don't need to communicate same point because they are TCWG also. Sometimes TCWG for general purpose financial statement and special purpose will be different. So you should be careful in identifying them. People who are having oversight, supervising the process may be different. SA 320, very important, there was MCQ on this. Sometimes they may specify that this is the threshold limit. Below this, if there is any misstatement, no need to worry about it, no rectification need to be done. They may have specified it, but we will have to find out materiality as per SA 320. And definitely you need to follow all the principles of SA 700 when it comes to forming opinion and then making a report. So we are through with the second part of the standard. that is planning and performance. Now, let's go to next, and the most important thing is description. So it says that special purpose framework is totally new thing. It is responsibility of the management to go to the notes to accounts and explain everything about special purpose financial reporting framework. What is the purpose? What is the purpose? These financial statements are prepared, explain the purpose, whether it is valuation, whether it is license, analysis, who are the intended users, it's government, private investors, bankers, who prepared the complete framework, what's the origin. Explain these important things, and auditor will evaluate whether disclosure is adequate or not, whether these things, PIO, is properly explained or not. Then auditor when he makes audit report, he's supposed to put a separate paragraph. This separate paragraph will be EMP, and in this we are going to highlight what is the purpose of this special purpose framework, intended users, and from which particular note people can know more about the person, users, and the origin. So management will also highlight, and we are also going to highlight. Apart from that, in this particular paragraph, we may say that this is for particular set of users. It is not useful for others. It is not useful for others. We may alert the users, and we may put the restriction that it should not be distributed to others, and it should not be used by others. Even if someone uses, we are not responsible. So we are going to highlight this framework, we are going to alert users, and we are going to put restrictions. We are going to do three things in that particular paragraph, and the heading is generally basis of accounting, alerting, and restrictions. So such kind of heading will come when it comes to EMP. So that is last 2 points for the very most important points. So that is a special thing. 800 talks about putting this, doing these two things. That is a special in SA 800. Then we go to SA 805. SA 805 is about audit of single financial statement, that is balance sheet, P&L, or cash flow statement. Audit of element of financial statement, that means a big part of the element of financial statement. It can be asset, liability, income, expense, or some part like fixed assets, current assets, and so on. That's called element of financial statement. Account can be particulars, sales account, debtors account, and item can be a specific income, expense, asset, liability. So nowadays there are such assignments that do only out of single financial statement, element of financial statement, or out of account and out of item. What to do in this case? Let's understand this, guys. So in this case, SA 805 will get applicable. Now we know what is single financial statement. What is element of financial statements? When we talk about element, suppose we talk about current assets. So all the notes which are related to current assets will be part of that particular element. Notes to accounts will always become part of particular element. Now here again we talk about, as I said, three things we are going to majorly talk in 800 series: acceptance, planning, performance, and then opinion and reporting. Now here about acceptance. So here when it comes to acceptance, again three things are extremely important, guys. Three things are extremely important because it was so important. Because it was so important, they have put this particular point in acceptance itself. Number one, we are going to accept this assignment provided there are three important things. Provided we should be confident that we'll be able to comply with ethical requirements and independence requirement. Then we'll be able to comply with all the standards on auditing. Exceptions are fine, departures are fine if they are more effective procedures, and sometimes we need to adjust, even that is fine. So first, most important, think carefully whether you will be able to comply with ethical requirement, independence requirement, and comply with all the standards on auditing. Exceptions are fine, departures are fine, adjustments are fine. That is first. Next, I will say that I'm bringing the sequence. So that is the first thing. We need acceptable financial reporting framework. Guys, these are just purely repetition of what we've seen in SA 800. We need a acceptable financial reporting framework. It should be complete, it should be reliable, it should be consistent, and so on. If it is prescribed by law, it is presumed acceptable. Recognized body, it is presumed acceptable. And third thing is very interesting and very, very, very important. That can a person other than regular auditor do audit of single financial statement or element? Answer is yes. The person doing this audit can be different, but the person need to be extremely careful. He need to take care of three things. UAD, ud. Ud in Hindi it means flying. He should be careful while flying. First, U is for understanding. He need to understand whether he will be able to gain same level of understanding of the business, about the industry, business, internal control system, which generally auditor of complete set of financial statement has. Whether he will be able to generate same level of understanding. Then A stand for whether he will be able to understand quality of accounting records and other accounting information. Whether he will be able to understand and find out the in general quality of accounting records and other information. Okay, whether he will be able to generate same level of understanding with respect to reliability. Whether he will be able to judge reliability of accounting records and information on same level. Then D, whether his work is going to get disproportionate. He's checking just fixed assets, but there is an issue with going concern. His work will be much disproportionate, much more than what he's checking. So you need to take care of these three things. If he can understand, if he can obtain same level of understanding, if he can know reliability of accounting records and other information, if he can protect himself against the disproportionate work, anyone can go for these assignments. Just take care of these three things. Extremely important point. Now, after acceptance comes the next point. Okay, when you are planning and performing this audit, there should be an accurate aim. That's the shortcut. So if you're doing assignment under 805, there should be accurate aim. There should be accurate aim, guys. Now, accurate aim. Now, what do you mean by this accurate aim? Let's understand. A stand for adopting standards on auditing. Yes, guys. So when you apply standards on auditing to audit of single financial statement or element of financial statement, you will have to adjust standards on auditing. Okay. For example, we are going to talk about materiality. You have materiality at financial statement, but when you're doing audit only of debtors or only of current assets, you need to adjust that materiality level. So they are saying we are supposed to adjust all the standards on auditing when we are doing this. Okay, so accurate aim. Then A stand for, that's lovely and very important from MCQ point of view, we can use audit evidence gathered during the audit of complete set of financial statements. If you've done audit of complete set of financial statement, you've literally covered evidence for each and every area of financial statement. Now that particular evidence can be used, and vice versa. Evidence from here can be used there also. That is going to make audit very effective. Then I stand for interrelationship. Whenever you check certain financial items in certain financial items, okay, you'll have to see the interrelationship ratios with other financial items which are not covered in audit. Yes, suppose you are supposed to check current assets. So when you are supposed to check current assets. So when you go and check current assets, guys, okay, in that particular case, you will have to automatically see how sales are moving, how purchases are moving, debtor turnover ratio, inventory turnover ratio, purchase turnover ratio. You'll have to look at the interrelationships also. And then M stand for maturity. So accurate aim. You need to adopt standards on auditing, make adjustments to them, and then apply them. Then A stand for you can use audit evidence in these particular assignments, audit evidence of complete set of financial statement. You need to look into the interrelationship with the other financial items and areas, even though they are not covered in audit. And we need to adjust maturity level. Maturity level of financial statement will be different, and maturity for debtors and current assets is going to be on the lower side, different. Finally, we talk about opinion, guys. So, okay, when you are forming, again the shortcut. This is not very important. ATS opinion. So when you have to form opinion, we have to form opinion whether financial statements are as per law, rules, regulations, applicable financial reporting framework. So when you frame opinion, think about it. Whether financial statements are as per law, rules, regulations, is it as per applicable financial reporting framework? A for applicable framework. Then sometimes management may have a special request. Okay, they may have a special request. Read terms of engagement carefully, what they want us to check, what kind of opinion they want us to give. Okay, so terms of engagement are important. So when we form opinion, we form opinion whether it is as per applicable financial reporting framework, law, rules, and regulation. Then T, whether it is as per the requirements of terms of engagement. Wordings may come from there. S stand for consideration for single financial statement or specific element. We need to be very careful, guys, here. So when you are making the opinion, you need to understand that applicable financial reporting frameworks are generally there for complete set of financial statement. They're not prepared keeping in mind single financial statement or element of financial statements. So we need to understand what financial reporting framework talks about single statement element, and is it suitable and giving adequate disclosures for single financial statement specific element. So keeping that in mind, we need to form the opinion. Okay, opinion wordings are going to be pretty simple. If it's a fair presentation framework, whether financial statements are as per applicable framework, plus whether they give true. When it's come to fair presentation, we go one step ahead, whether it gives a true and fair view, or whether it presents fairly in all material respect. Okay, presents fairly in all material respects. Okay, now when it comes compliance framework, we only go and see whether it's as per applicable financial reporting framework. So when we're going to frame opinion, think about the wordings, think about applicable financial reporting framework, what terms of engagement say. Then as for specific consideration, whether the framework talks about single financial element, yes or not. Okay, and finally the opinion wordings. Now whether to use the fair word or not, that's a very important thing. Whether to use true and fair view word, whether to use presence fair in all material respect. We need to take into point some arc the judgment. We need to, there's just a shortcut. We need to keep in mind certain things. First, framework. We need to consider, read and understand the framework. Is it for the complete set, and is it directly, indirectly, is it applicable to single financial statement or a single financial statement or element of financial statements? Is it applicable to them? Is it positive about their application to it? Okay, we are supposed to see whether there is any restriction of application to the single financial statement or element, and then whether there's a compliance, where the full compliance of the financial reporting framework for full compliance of financial reporting framework with respect to that particular single financial statement or element of financial statement. So whether to use the word true and fair or presence fair in all material respect. ARC, see what framework says, see whether there are restrictions, whether there is the full compliance, see whether there are departures from what framework says or additional disclosures. Okay, if these things are really positive, giving more information, better information, positive information, we'll use the wordings true and fair. And if there are doubts, there are issues, there are problem, unresolved matters, we may not use these strong wordings, very influential wordings. whatever it is, a lot of judgment is required whether to use fair word or not. Okay, so the judgment was the, guys, this is all concept revision. This is a listen guys, this is a all concept revision, so it is absolutely fine. Now focus more on the concepts where there's a pink star. Now forming opinion. So before this we had a question, form of opinion, what kind of wordings will be there and so on. Now the question is how to form opinion. We have to use the principles of SS700. SS700 tells us in detail that go and check all material items, are they free from material misstatement, look at the uncorrected misstatements, also look at the quality of financial statements. So follow the principles in SS700 when it comes to forming the opinion. Then very, very important from the exam point of view, if you are given assignment to audit complete set as well as you are giving assignment for single financial statement element, give separate opinion. Don't club it in one single audit report. Make separate audit reports. Okay, you may publish it together, that's absolutely fine. You want to form opinion, use principles of 700. Give separate opinions. Okay, then you may publish it together, it's up to you, but it should be differentiated. It should be different. That it is these are the audit report on complete set of financial statement, and these are the complete set of financial statement, and this is that is single financial statement, and then audit report of single financial. It should be clearly differentiated. Okay, there should be satisfactory differentiation. If there is no differentiation, don't issue the report. It should be differentiated. People should not get confused between audit of complete set and for complete set of financial statement and single financial statement. Now, very, very, very important, effect of modification. Extremely important. Effect of modification. Now, let's see, guys. So, if the opinion on complete set of financial statement is modified, if opinion on complete set of financial statement is modified, then go and understand what's the matter of modification, what is the issue, what's the problem in which financial item, and see whether it is having effect on single financial statement or element of financial statement. It may have an effect, it may not have an effect. Okay, there's a problem with revenue and we are talking about P&L, it is having an effect. But if you're talking about balance sheet, it may not have the effect. So you need to consider what's the issue, what's the matter exactly, and whether it's having effect or not. Further, if you are giving adverse or disclaimer on complete set, then you cannot give unmodified opinion on single financial statement or element. Blanket ban is there. Because if you're saying that majority of the financial statement is adverse or majority you're not able to get evidence, you give disclaimer, how can you come back and say that, okay, majority things are problematic, wrong, but in the same set of financial statement, single financial statement is good, element is good. How can you say that? That's not allowed. Okay, if you're saying something is bad, it's bad. You cannot take out a big part and say that it is unmodified. But then there is an exception, and that's the most important thing. If you are doing audit of specific element, not financial statement, specific element, and if three conditions are fulfilled, you can give unmodified opinion. Number one, there is no prohibition on in giving clean report, unmodified report. So it's not there in India. Next, it should not be published together. There will be confusion. There will be confusion. It should not be published together. There should not be any kind of prohibition. There is no prohibition, not published together, and it should not be a major part of the financial statements. Then it can happen that on specific element, you may give a clean report. When it comes to single financial statement, you can never give it, even if they're published separately. They are further specified. It was always there was a ban, but they again specified that. That is extremely important. Consider the effect. If there's the adverse disclaimer, no unmodified opinion, there are exceptions. If three conditions are fulfilled, you can give clean opinion. Okay. If single financial statement we cannot give clean unmodified opinion there. That's not possible. Even if they're not published together. Now we have more very interesting clarifications about it. Daro points. In Hindi it means to be fearful. Daro. Disclaimer. Very, very, very interesting point. Very interesting point. It says that if you are giving disclaimer of opinion on results of operations, you're giving it on P&L. On P&L, you are giving disclaimer. Okay, on P&L, guys, on P&L, you are giving disclaimer. Or when it comes to cash flow statement, you are giving disclaimer. It is absolutely fine that you give unmodified opinion on state of affairs balance sheet. Yes, very interesting. You may go for disclaimer that you don't know anything about P&L balance sheet. But when it comes to financial position, state of affairs, you are very confident. You can see assets, you can see the liabilities. It is, this unique situation is possible. Disclaimer on P&L and cash flow statement, but clean opinion on balance sheet. That is possible. Adequate disclosures. A very elaborate detailed disclosure should be there in notes to accounts with respect to single financial statement, an element of financial statement. Okay. Adequate disclosure. Any material transaction events, it should be disclosed clearly. Reference to modification. Irrespective of whether modification is having any effect on the single financial statement or element, irrespective of that, you should always put a other matter paragraph and explain people that on complete set, this was the problem and this was the reason. This was the problem, this was the reason. That should be communicated. Then other standards on auditing are applicable as it is. So even after you know everything, thorough points are there. Beautiful point of disclaimer. Then adequacy of disclosures is an important point. Whether disclosures are properly there in notes to accounts about single financial statement element. Reference to modification is must. Other essays are also applicable. Few examples of them, T schedule. Few examples of them, T schedule. Okay, so tangible assets, if there's a schedule of tangible assets, that comes the schedule tangible asset, that is on element of financial statement. Externally managed assets like pension plans, schedule of that, again element of financial statement. Account receivable, that is a particular account, schedule of disbursement, that is out of particular item. So they are giving example when it comes to specific elements, tangible assets, externally managed assets, okay, account, trade receivables, related items, schedule of disbursement. These are the example of single financial statement, element of financial statements, and accounts or items. Now next is audit of summary financial statements. Now the question is audit of summary financial statements. Now the question is what is summary financial statement, guys? What do you mean by summary? Summary is something which is derived from detailed financial statements. Okay, detailed financial statements derived from the audited complete set of financial statement, but it is having comparatively less details, especially notes to accounts. Overall structure is same, but the notes to account details are comparatively less. That is called summary financial statement. The most important point in acceptance is only auditor of complete set of financial statement can do the audit of summary financial statement. Primary condition, no exception to it. And then and this is very important because only that person has a full knowledge of the entity and its environment, internal controls of complete financial statement, and will be in position to understand summary and audit it. Then there are further conditions, as we have been discussing. They use the word criteria. So we use the word financial reporting framework for basic principles and format. When it comes to summary, the basic principle and format which is used, that's called criteria. In India, we have Form AOC 3. AOC 3 gives the format and the content of summary financial statement. So AOC 3 is criteria. So just like we said that financial reporting framework should be acceptable, the next is applied criteria should be acceptable. First, explain what is criteria. So basic principle and format which is used is called applied criteria. There is always a risk that summary financial statements become misleading. We are aggregating. We are taking the information and adding them, aggregating. Sometimes if unrelated items are aggregated, so say fixed asset and current assets, such kind of aggregations are not going to work. They are useless, they are completely misleading. Okay, so we need to be very careful how aggregation, totaling, addition is done. So first we need to explain what is criteria, then we need to explain the challenges involved, risk involved, misleading chances, and hence auditor should carefully see and evaluate the criteria. These are the factors involved. NPI should not be misleading. N stand for nature of the entity. Whether this criteria is suitable for business entity, non-business entity, is it suitable for that? The basic principle and format is suitable. The purpose, okay, NPI, next is purpose. Is it giving you all the information for valuation of shares as per revenue, valuation of share as per net assets? Okay, what is the purpose? Is it giving you full information required for that purpose? Whether information needs of the intended users, okay, whether it will be fulfilled, we will be able to fulfill the information need of the users, and we need to check that it's not misleading. Summary should not be misleading. So we need to see the factors. Nature of, is it suitable for nature of the industry, purpose is fulfilled, information needs, it's not misleading. Title should be very clear that it's the abridged financial statement, summary financial statements. So if you want to say yes to this particular assignment, you are supposed to talk about what is applied criteria, supposed to talk about applied criteria, what are the issues involved, what factors need to be seen. Now broadly, when it comes to types of criteria, recognized criteria, criteria which are approved, okay, by a recognized body, that is again presumed as an acceptable criteria. If it is given by the management, you will have to study, analyze it, whether it is acceptable or not. If it is given by the management, if it turns out to be unacceptable, if it turns out to be, okay, that, so guys, criteria should be good, that we have seen. If it is given by law or recognized body, it is presumed acceptable by management. We need to evaluate. If it comes to be unacceptable, don't accept this assignment unless required by law. And if law enforces it, then do it, but don't give reference to standards on auditing. And write clearly in engagement letter that we are not going to give reference to standards on auditing. So first we talk about whether the criteria is good, criteria is acceptable, depending different types of criteria. Then they're supposed to give it to us in writing in agreement that preparing financial statements is their responsibility. Preparing financial statement is their responsibility. Then after preparing, making it available. Preparation of summary is their responsibility. After preparing summary, ensuring that audited financial statements are easily available to people. First, we will make everything. Then you are supposed to make things available to people. Okay, that's the very important requirement. If law says that no need to make it available freely to everyone, okay, then we need to analyze whether there's such kind of law is there, and we need to describe this in notes to account that there is a law which says that it's absolutely fine if it's not available easily or available to only few people as per law. We will need to evaluate whether it's freely available, whether description of ability clearly explains how to obtain it. It's there in notes to accounts. It's a public document, easily people can access it through public domain like MCA. Ready access should be there. Then we say that it's clearly available. Inclusion of audit report. Management responsible to include auditor's report on summary financial statement in document that contain. Wherever summary financial statement will go, the audit report will also go. So guys, the first point was criteria should be lovely, criteria should be acceptable, it should be mind-blowing. And we talked about recognized criteria and other criteria and so on. Next, we need in agreement every damn thing, that you are responsible to prepare things, make things available. If law says no required, explain in notes to account of summary financial statement, evaluate availability. So we first spoke about the criteria, then we spoke about the agreement. It talks about preparation and responsibilities. Then very important to evaluate whether it is audited financial statement complete set is available to everyone or not. Okay, and then wherever summary financial statement, there will be along with that audit report on summary financial statements. Then form of opinion we'll discuss. So we just discussed the acceptance. Okay, just discuss about the acceptance. It was all about the criteria and about getting responsibilities written in the agreement. Now next is what kind of procedures, how will you check summary financial statement? So there we have a dada. Dada means gunda, means bad man. So dada at CCD. So dada at CCD is going to help us. Dada at CCD is going to help us. So first we are supposed to check, evaluate the disclosures. When we use summary financial statement, disclosure extremely important, whether proper breakups and explanations are given about summary financial statements, evaluating the disclosure. When it comes to procedure, we need to see whether disclosure is adequate, complete. Then whether availability, whether audit financial statements are easily available. Okay, easily available to everyone, different modes are there. Whether it is clearly described what should be the website link and how to access audit financial statements. And finally, we need to compare the data in summary with audit financial statements, whether we need to recalculate whether they agree with each other. 4 detailed figures should add up into one figure on summary financial statements. Compliance, check compliance, CCD, C for check compliance of the applied criteria, whether criteria is complied with, whether disclosure is as per criteria. So it's great. Dada at CCD. We need to evaluate disclosures, availability of whether clearly available are there. Okay, description of availability of audit financial statement visit, it is easily available. And then CCD, appropriate level of aggregation should be there. Excess aggregation can lead to misleading things. Compare, we need to compare with audit financial statement, compliance with applied criteria, disclosure, and so on. That's how do you perform. Very simple. Form of opinion. Wordings will be whether it's a fair summary, consistent summary. Wordings can be prescribed by law. If law prescribes something which is not acceptable, can be misleading, then think about it. Can we add few words and make it better, understandable? So form of opinion, wordings are, we talk whether the summary is a fair summary or a consistent summary. Now, next is mitigating misunderstanding. Now, mitigating misunderstanding, that if law prescribes the wordings, see whether additional disclosures can mitigate the misunderstanding. If not, and still you have to do the audit, don't give reference of essay. Don't give reference. So when it comes to form of the opinion, there are very simple wordings are there, but law can come and do all the nuisance. So be careful in that case. What will be the format of the audit report? What is the audit report format? Very simple title. It will be independent auditor's report on summary financial statement. Addressee, it can be appointing authority, it can be board of directors who have appointed addressee. Then there will be introductory paragraph. We'll identify that, okay, it's a audit report. We have done audit of summary financial statements, and they were derived from so and so audit financial statements, on which report so and so report was given, whether it was unmodified or modified. So we are going to identify things. Yes, it's audit of summary. It was derived from so and so financial statement. Report was given so and so date. We'll clearly specify in introductory paragraph only about subsequent events. There will be always a gap between audit of regular financial statement and summary financial statements. In between things are not checked. We'll clearly specify in between things are not checked at all. Subsequent events are not checked. Okay, then we are going to again make people cautious that reading summary financial statement is not substitute to reading detailed financial statements. So it is, guys, this format is based on the old audit report format. In old audit report format, opinion was after auditor's responsibility. uh, that is the only change, and basis of opinion used to come only when there's a modification. Only these two changes. So first we have title, then we have addressee, then we have intro paragraph where we identify things, and then we make people cautious, we warn people, make them cautious. Then we have management responsibility of preparation of summary, auditor's responsibility to do audit of summary financial statement as per SA 810, and we give opinion on summary. Is it a fair or consistent summary? Signature, date, place. When it comes to date, it's pretty simple. When it comes to date, it's pretty simple. First, ensure that summary financial statement are prepared. It is signed by proper representative. They have taken the responsibility of summary. We have obtained all the sufficient appropriate evidence what is required, and then only we should sign the report. And the place of signature. Now, very, very, very interesting. What will happen if the complete set of financial statement, auditor has given qualified opinion, EMP or OMP? If on complete set a qualified EMP OMP is there, if this is a situation, okay, we need to specify mandatorily in the summary, in the audit report on summary financial statement, that listen, complete set, the opinion on complete set is qualified, it's having EMP, OMP, describe it. Complete basis for qualification should be included. Complete EMP, OMP should be included. Okay, and how it affects summary financial statement, that should be given. See guys, in audit report on summary financial statement, we talk about two things. Whether the summarization process was proper, whether it was properly summarized from the detailed financial statements. And we also talk about what are the issues and problems in financial statement and its effect on the summary. So here we are going to say, yes, these are the problems, and so part of the summary financial statements are not proper to that extent. Now, very interesting, if there's an adverse. If there's an adverse or disclaimer, again we'll specify in audit report directly that the complete set, the opinion on complete set is adverse or disclaimer. We are going to include basis paragraph, and then we say that because the source is so bad, there's an adverse or disclaimer, it will be inappropriate to give opinion on summarization process. To say that the source is adverse and disclaimer, and then to come out and say that it is a fair summary, will be contradictory. So we go for denial of opinion. If it would have been just a qualification EMP, OMP, we would have included everything, that's it. Include everything, include the effect, that's it. With adverse disclaimer, we'll include everything, we'll do the same, but at the end we'll say that it will be inappropriate to express opinion on the summary financial statements. Can the opinion on summary financial statement get modified? The summarization process? Yes, it can. If there's an inconsistency, if the summary financial statement is not consistent, it doesn't match with the detailed financial statement, we'll have to say that it's not a fair summary and management is not ready to change it. Okay, so here directly we give adverse. There is no question of qualification. When it comes to, if they are not consistent, it's a big thing. Adverse opinion, it's not a fair summary. Okay, we may again alert people that it is not useful for others. We'll restrict that, don't circulate to others. And even if you do that, we are not responsible. If it is a special purpose framework, we'll alert with respect to special purpose framework also. Then very simple things about the comparatives. So complete set may have a comparatives, and summary financial statement may not have comparatives. See whether it is having a major impact on the understanding. If it is having a major impact on the understanding, it is if it is having a major impact that there was big changes as compared to last year, no proper understanding is obtained, okay, then we'll have to include in the report that no, it's not a fair summary, it's not giving proper understanding. Okay, and if it is audited by, if the comparatives are last year is audited by someone else, we need to put a OMP to explain that it is audited by someone else. Supplementary information, we know additional information not required by criteria or FRF. Okay, it should be clearly differentiated. It should be written after a financial statement have ended. If there is no proper clear differentiation, we will ask management to do it. They don't do it, we write it in the audit report. Other information, just like 720. Guys, majority of the things are like standards. Go and read other information, other things in annual report. See if there are visual material inconsistencies or material inconsistencies are there. Okay, it should be investigated and proper action investigated and see what is wrong. Whether summary is wrong or other information is wrong should be specified and proper steps should be taken. Now, there can be two situations. Auditors association, important thing. Suppose auditor management promised that wherever summary will go, audit report will go, but then it's not planning to include summary, audit report on summary financial statement along with summary financial statement. We'll ask management to not to do this. Always along with the financial statement, report should go. If management is not taking proper action, auditor will take some action. Make public announcement about it, go and speak at AGM and tell about it. Then the next is, they have not appointed auditor for audit of summary financial statement. Directly, indirectly, it should not be inferred that summary financial statements are audited or examined in any manner. It should not be a message directly, indirectly that summary is audited and audited by so and so person. If the message is like that, go to the management, don't do this. Don't use our name with summary financial statement when we are not done the audit. You can appoint us and we'll do it for you. If management refuses, again take action. We'll go and tell everyone that we have not done audit of summary financial statement. Okay. So situation 1 was they are not ready to circulate, or situation 2 was they are not ready to appoint, but simply claim that it is audited. Lastly, timing of the work and even subsequent. Now listen, once we are supposed to report when the complete audit is over, when summary is prepared, acceptance is there, audit is over, no additional evidence is required, then we put a report on summary financial statement and we don't check subsequent events. Guys, this was the portion we covered which was not happening properly. Rest of the things we'll see tomorrow.